Welcome to the dark side.
Yo, what's up, guys? Welcome to Decrypton, the next edition of the Krypton series. This is called Decrypton because we're basically decrypting Krypton patterns and learning how to trade the opposite side of them. We call this the dark side of the moon. As everybody knows, Krypton's all about those moon boys who love to fantasize about things going up forever. But the fact is, that is 100% false. Every time you see a parabolic move, there is a 110% probability of a massive crash. And that's what we're going to talk about in this course is how do we identify those potential crashes that always come 100% of the time? And one, how do we protect our longs when we are part of that on the long side? How do we identify, okay, maybe we should start locking in profits? But on the flip side of that as well, kind of a double-edged sword is how can we actually take advantage of this to our benefit and actually make money when things actually go down? It's very important that you understand both sides of the coin so that you can play both sides of the trade. And now this course is going to be very brief and very quick, just as I made in the Krypton course. I didn't make a big 25-hour bullshit course talking about random bullshit to try to act like I was smart, try to satisfy myself like I need to put more stuff into it, okay? This is going to be extremely brief. All we're going to go over is the principles of price action and understanding why things go up and why things go down. So you'll probably be able to finish this course maybe in under 4 hours, maybe under 5. You're going to understand all the principles of price action. Then we're going to be followed up by actual real trade examples of showing you everything you taught in the introduction educational part. Then you'll see the live trades go down, me implementing the things that I talk about in this. So super excited to get started here. One thing I will say is that shorting the crypto market can be scary at times because shit fucking pumps. Shit pumps hard. So you need to be careful. Don't take big risks. That's all I can say. Super important that you understand both sides of the trade. Let's get into it.
Welcome to the dark side.
All right, guys, let's get right into it. Part one, we're just going to talk about what is shorting and why should we learn how to do it. So basically, in a nutshell, what is shorting? It's making money when assets drop. And there's actually some sort of loan agreement, which is basically a margin agreement to promise to buy back the shares or coins later, and they actually lend them to you first. Doesn't fucking matter. We don't need to understand why that happens. But just as when you buy low down here and you sell high up here, that's what we would call a profit. Same thing goes when you're actually shorting, is you're just selling up here and then you're buying back down here to cover, okay? And it's basically, as I said, a loan agreement that's on margin. Doesn't matter how that fucking works. I still don't understand it. All you need to know is that you click the short button or sell button, then you click the buy button down here, and that's a profit. Or you click the sell button down here, and you click the buy button up here at a higher price, and you actually lost money. So that's all you really need to know about how shorting works. The same thing as buying low and selling high. You're just selling high and buying low later, and you make a profit, which is awesome. How cool is that you can make money when things drop? Elon Musk hates it. He thinks it should be illegal, but I absolutely love it because it feels so good when everybody's panicking because the market's eating shit and you're making money. Next part about why we want to learn how to short. One, because this is what we call 100% probability trading. When you're trying to find the next big moonshot, you have no idea when things are in a pre-breakout. Say if we're trading Krypton patterns down here, okay? We have no idea that this thing is going to make a 100% gain prior to this actually breaking out. Even if it does break out, okay, we're now up 5%. Is this thing going to go to 100%, 200%, 300%? No fucking clue. There's absolutely no probability of this happening. We have no idea if that's going to happen. Obviously, we can take the text that we learn in Krypton to potentially anticipate that might happening, but there is a 0% probability that we can guarantee that that's going to happen. Buying pre-breakout, buying post-breakout, we have no fucking idea. But when we identify Krypton patterns that have already gone parabolic in a massive run-up, whether they be 1 to 5x moves in a very short amount of time, guess what? We have now a 100% probability and chance that there's going to be a massive crash coming up. There's no, is this going to happen? It's just, when is it going to happen? This is why we call this 100% probability trading, because if we identify the patterns that have already gone parabolic, there's a 100% chance the move that we are looking for is going to happen. The difficult part about trading short is we don't know exactly when that's going to happen, but what we're going to learn about today is how do we identify certain levels where we can kind of anticipate much better than just a wild random guess when that actual reversal is, then we could take advantage of when that crash happens, because that crash happens 100% of the time. That's why there's this big benefit of shorting over going long, because long, pre-breakout or breakout, no fucking idea what's going to happen after that. 0% probability in our favor that we know that's going to happen. Shorting, we've identified parabolic move, 100% probability the exact move that we are looking for is going to happen. But there's going to be a shitload of volatility, and we don't know exactly when it's going to happen, okay? So in this course, we're going to try to identify how to minimize risk with the volatility and how to identify when in a range, obviously we're not going to be perfect, but we're going to try to identify ranges where those tops might be, how we can actually enter and actually make money on the trade going forward. The next part about why we want to learn how to short is because now we have a double-edged sword in trading, right? Just as we learned in Krypton, say if we had a revival pattern where we had kind of a peak up here, lead in trend is bearish on the revival pattern followed by an ascending triangle breakout. Now we're trading this because we're like, okay, we have a Krypton revival pattern breakout that we can go long on here. Say if it's like in an industry that's hot right now, such as the metaverse or gaming, a lot of coins are blowing up right now in that sector. So we're like, okay, combination, story, chart. We need idiots to continually buy up here to push price action up. That's a good trade, right? We can go long that trade. But then we can also use these shorting strategies that we teach and just the understanding of supply and demand of, okay, when should we potentially start locking in gains on this? And when should we start maybe looking at this as a reversal trade to actually short? So then say if we got out of our position, had our profit targets from Krypton, we got some profits here, exited our last position up here. And then maybe now that we're in a supply zone here, on this chart, maybe we should actually start looking at this as a potential area to start shorting, get out of our long position, or maybe we weren't even long at the first place and just start looking, okay, this thing's getting ready for, maybe this ran up 250% here. Now we're like, okay, let's take advantage of a 20 to 40% drop and go short. So that's a double-edged sword. You can play both sides of the trade. That's another big reason why it's important to understand shorting. The next part is why short is hope, fear, and greed is dominated by the fucking sheep of this world, okay? Guess what? Wolves eat sheep because it's an easy kill. They're a bunch of idiots. They're like running around like a bunch of fucking idiots in a herd together like, right? All together like a bunch of fucking fools that are confused and bad. Like idiots, okay? That's sheep. And we look at like kryptonite patterns or Krypton patterns in general. Typically, as I teach in the Krypton course, we're really just trying to get in down here, right? This is the wolves down here. And then there's like a small window of opportunity, 5 to 10% above the actual breakout point where it's kind of like, you're stepping on the line of taking an unnecessary risk, okay? I almost never buy in here. But this is still like a little bit lower risk because the breakout's there. We get volume confirmation coming in, big spikes in volume on the breakout. So like, okay, this is looking good, especially if we got in pre-breakout. And then all the fucking idiots, the hopium addicts over here that start buying in at 25% plus, 50% plus, 100% plus, okay? These are all the idiots that are going to be underwater if things start reversing, and then they're going to start panic selling because they bought after a 100% move. That's really what we're trying to do, is take advantage of hope and greed. All the hopium idiots, these are fucking complete idiots, okay, that buy in these ranges that have gone up, parabolic after a massive run, and they still continue to buy because they don't understand price action, they don't understand supply and demand, and they don't understand just the physics of what goes up must come down, and that there's a 100% probability after a parabolic move every single fucking time that there's going to be a massive 20 to 50 to 70 to 90% drop after these parabolic moves. Doesn't matter how good the fundamentals are. Cycles end and things crash. And they stabilize, then they might make another run up to a new all-time high. But there's always that crash after a parabolic move. When people are thinking with hope and greed, right, that's basically just emotions, right? If we can take advantage of people's emotions, it's a lot easier to think clearly when you're thinking clearly. And then people that are thinking with irrational emotions, they're much more prone to potentially panic sell. And right, a lot of times the moves up can be a lot slower than the moves down, right? Once the crashes start settling in, we'll see massive panic sell-offs and things cracking. Like, if we look at Bitcoin, for example, we see these massive runs up. Once like the panic sets in, we see these massive like 20 to 30% candles where it's just like, that's all these idiots that bought, massively up here, a lot of them on leverage after a massive run up, they get stopped out or liquidated from their account. And that's when you see these massive dumps. And that's the same thing that we see across all the altcoins every single time. These kind of slow runs up, and then all of a sudden, wham, just this massive fucking drop here one single day. And then that kind of leads into, okay, now that there's a big single candle drop day, there's a lot more fear across the board. And that means everyone who bought above these levels, these previous levels here, are now at a loss. And now they're all kind of panicking and scared like, shit, if we get a bounce, maybe I should exit out of this position because I don't want to continue to lose more. So any kind of bounces after a big sell-off day, people look at that as an opportunity to get out, and then you see a secondary decline. Then, a lot of times we see some sort of recovery and then followed by a bounce. Okay, but you can take advantage of these panic sell-offs. So that's basically what we're trying to do in Decrypton is like, okay, identify parabolic moves. I try to identify a range of where that top might be, and then take advantage of all these idiots that bought, using hope, fear, and greed, or hope and greed. And then once the fear sets in, that's when things start dropping rapidly across the board on these altcoins. In addition to that, guys, why short? It feels amazing to crush it when everyone is losing. This is pro knowledge. There's so many times where I've called the top on Twitter where I've just been like, guess what, guys? I just liquidated my entire account. Not feeling it. And then all of a sudden, next thing you know, there's a 20, 30% decline in Bitcoin. And sometimes it doesn't mean I'm fully either short right there and I'm making a bunch of money, but sometimes that can just also mean that, okay, I got rid of all my long positions and everything's eating shit, everyone's freaking out. And by understanding and identifying supply and demand shifts, I can get out of my positions. And it doesn't necessarily mean I got short, but sometimes I do get short as well. There's also the situation of protecting your longs, right? That's also why we want to understand shorting is not only just to make money when things go down, but also if we have a large position long, maybe I should start considering getting out of these positions to protect my longs and so that I have money to buy the dip. Right? Because it sucks when everything dips, 20 to 50 to 60%, and you don't have any money to buy the dip because you bought everything high and you didn't sell anything for profit. And now you just lost 50% of your account. And rather than locking in some gains or all gains at the top or near the top and having a bunch of free capital to buy the dip now, you just went through this massive decline of depression, fear, worry, complete irrational emotional thinking that your life is over. And then you don't even have the mental capacity to buy the dip, right? Because you just went through this absolute turmoil. So it's great to have the deep understanding of price action in general, right? Because 99% of the crypto community hodl or die. That means they have no edge in this market. When everyone has the same exact opinion, just like everyone thinking Bitcoin is going to 100K, which I do think it can go to 100K. But the fact that every YouTuber is out there, Bitcoin 100K, it's going to 100K by the end of the year, right? It's November 25th, Bitcoin 100K. That means it's got to double from here. I'd say it's possible, but not likely, right? It's not to say that it can't happen at all. I don't like when everybody has the same fucking opinion. Not everybody's going to win. The majority of people should lose in all markets. Only a small amount of people actually make money. And so it's important that you have knowledge and understanding of how things work and how price actions work so you can try to be part of that small percentage of people who actually make money. Another thing is it protects your longs and profits so you know when to sell. You become less biased and married to your positions, right? So many people are just hodl or die. They get into this very weird tribal community aspect of whatever their favorite coin is, and they become married to position. No matter if the coin just dropped fucking negative 75%, it doesn't fucking matter to them. They are sucking this thing's dick so hard, doesn't matter how low it goes, they will keep dropping down lower with it. Ugh, and they're just complete fucking lunatics, okay? So when you understand how things and why things go up and down, you'll become less prone to getting married to these positions, become these hodl groups where you're all circle jerking each other. No matter what, the fucking CEO could come out and say, hey guys, I'm shutting it down. It doesn't work anymore. And they'll still keep buying the dip or just keep hodling. That's how crazy these fucking people are. And the next part is preserves capital and holds in more gains when you have them, right? So many times in my career of trading, you have massive gains. And if you don't lock in profits, you give it all back and then you fuck everything up throughout here. And then it's just a disaster. It's not as easy as it looks at all. It's just really important that you have a deep understanding of price action. Whether or not you take this course and even do any shorting whatsoever, it's going to help with your long positions and having the ability to understand price action when things might be reversing to lock in more gains and keep more of your profits. But anyways, guys, that's it for part one, just a deep understanding of how shorting works and why we want to do it.
Welcome to the dark side.
All right, guys, so now that we understand why we want to short, I'm going to go into the bad news of maybe why you don't want to short. And even if you take this course, like I said, and you never make any shorts, at least it'll give you a big understanding of when to lock in profits. Now, obviously, shorting is like a pro level skill, which means it's higher risk and higher stress. We're gonna look into some of the reasons of why it's higher risk and higher stress in this part of the video. So the first thing we're talking about, why not short, is because there's infinite loss potential. That's not a good thing. Sounds pretty bad when I say that out loud. So let's just take a look example of how that works. Let's say you buy $10,000 worth of Bitcoin at $50,000, right? You can only lose $10,000, and you can only lose that $10,000 if Bitcoin goes from $50,000 down to zero, which is highly unlikely, right? To go to zero and it just disappears and you lose your $10,000, okay? But say you shorted $10,000 worth of Bitcoin at $50,000. You went short right here at 50K. You can make a decent size, say it drops 50%. That means to make 50% gain, it'd have to go to 25K. Okay, and you make 25K, you make 50%. That means you're gonna make $5,000. So now you have $15,000 in your account. Okay, so you can make 50K, but it's pretty hard for it to drop 50%. Not saying it's impossible. We do see moves like that all the time. For you to lose that $10,000, it has to go to 100K, right? And if it goes to 100K, your entire $10,000 is gone. Going from 50K to 100K is a lot more probable than it going from 50K to 0K. Okay, so you can easily lose your $10,000 much easier than just by buying Bitcoin at 50K. If it goes to 200,000, guess what? You lost your initial $10,000, and now you're gonna owe your broker $10,000. You're gonna be negative $10,000 in your account. And your broker's gonna be like, yo, bro, it's 10 fucking grand. Where's our money at? The good thing is that the broker's gonna stop you out before that happens, and they're automatically gonna liquidate your account. You're You're going to get liquidated. But there's different things that can happen here, especially not so much in crypto, but just an example of what I remember a long time ago. This is 2015. Somebody was short a biotech stock, and there's all these articles coming out. My short position got crushed, and now I owe E-Trade $106,000. And Joe Campbell claims on Wednesday he went to bed evening with $37,000 in his trading account at E-Trade, and then the next thing you know, he owed his broker and a debt of $106,000, meaning he lost all his $37,000. Now his broker saying, yo, bro, you owe us $106,000. Now, in the stock market, it's way different because the stock market closes, at 4:30 p.m. and then everything's closed and there's nothing you can do about it other than there is pre-market and after-market trading. But in biotech stocks, of which happened in this case, news came out overnight, and it's not like crypto where it's open 24/7 where it would gradually run up 800%, of which the stock did. It would just close right here, and then all of a sudden next morning, news comes out overnight in the lull period when the stock market's closed. There's no trading. All the order books that were, say, down here at the lower price would disappear because people are like, okay, I'm not willing to pay it down there. And then people all of a sudden be willing to pay much more at a higher price, and it would gap open. So the broker wouldn't even have a chance to do anything to liquidate the account in that lull period when the stock market's actually closed, and the stock just opens at a much higher price, plus 800%. And now all of a sudden that guy is down on his position massively and owes his broker $106,000, whatever it was, right? So in shorting in stock market, it's much riskier than crypto. At least crypto, it's open 24/7. So our broker will be protecting us 24/7 so that we don't, owe our broker, from a $10,000 account, and then all of a sudden we owe them $100,000. So it can't happen in crypto unless there's an error with your broker, in which you might just be able to say, fuck you, you guys fucked up. It's easier to lose the entire position of capital if you short 10,000 than it is to by buying 10,000. So infinite loss potential on crypto, which is not necessarily a good thing. The next part is why not short, is that it's a much less clear trading plan, right? When we look at the Krypton course and we're doing Krypton breakout trading, when we buy into a breakout, right, we're looking for the much more clear, obvious, resistance zone breaks out. Okay, that broke out. We can clearly see where we can draw a line. Simple. Now that level that we just broke out of is now going to be some demand zone. And it's like, okay, if it doesn't hold above that, it's pretty clear that it's looking like a false breakout and maybe we should stop out. Or we put our stop somewhere below the previous lows of another demand zone or support, right? And then we just create a stop loss. Like, okay, easy, simple, done. Much more clear trading plan. But when it comes to shorting, and we're seeing these parabolic all-time high moves that are just going off this irrational behavior, just blowing through resistance levels, or there is an all-time high parabolic move, meaning that there's no previous resistance or supply zones for us to judge, okay, well, it's coming up on a supply zone. That's probably an area where it's going to peak out, right? If it's an all-time high parabolic, that means blue skies ahead, little clouds, blue skies out here, birds are chirping and flying, right? There's nothing up here stopping other than looking at the beautiful clouds and birds like, hey guys, we're flying by, flying high up here in the clouds with you, right? That's what is difficult, and I call it the off fuck zone. When you're short a position, you have no idea how much higher it's going to go, and that's why it's very scary, not necessarily recommended to be shorting all-time high parabolic moves. Then there's also the, basically if this was, say, revival pattern that broke out here, okay? These are the recovery parabolics where we see, potentially revival that comes up, and at least with these ones, we now have areas where we have supply that we can actually, gauge of like, okay, it might be here. The difficult part is when we're looking at these, we have a very clear revival pattern. It happened one time, okay? One breakout, one time, easy set up a trading plan. But when we're actually trying to call the top on a recovery after a kryptonite pattern, and it's say up, 100% here, and then say this is, 200% up here, then up here is, 300% gain. The problem is we have to guess which one it's going to be, or we have to manage the risk and potentially fail on this twice before we actually hit the actual trade, which makes it much more difficult to manage the risk because, okay, say if it was a revival pattern, broke out, 100% gainer, and we have this big, supply zone up here. We're like, okay, 100% gain into a supply zone. This could definitely be the top where we want to potentially make a trade, and then this thing potentially drops down. But what if that's not the top? What if the next supply zone is another 100% above this level from the previous breakout down here, and rather than it topping out here, it makes another send up here to the next level. And we're like, oh shit, now it's up 200% at another supply zone. This has got to be the top. Let's set up a game plan, trade it, get short. Okay, did we make money? Oh, fuck, it's still going. Stop out. Now, by the time we lost on this twice in a row, mentally, we're not going to be as sound as, if we picked it right the first time. And so now it's coming up on a third supply zone. And a lot of times what happens in shorting is you enter early because you have FOMO. You're like, well, this has to be the top. And then by the time it's actually the top, you just fucked up a few times, or you might not even fucked up, but you made a sound trade and then stopped out. So you've already lost twice. And now the third one, you're like, my confidence is lower. I don't want to lose for a third time. And so you're now looking at this like, okay, well, maybe I just don't even want to bother with the trade because I'm fucking sick of this. Or you take the trade again, and then you finally hit the fucking thing. But, you know, you might make a 25% gain here on the third time, but you might have lost 10% here on this one because it failed, and then 10% here. So you might only walk away with 5% after losing on the first two trades. That's the difficult part of shorting. It's a much less clear trading plan. There's a lot more kind of not necessarily guessing, but uncertainty of when the top actually is on these positions. And so it makes it difficult, and it's fucking high stress. It sucks sometimes. As I said in the beginning, there's nothing feels better than when things are eating shit and you're absolutely crushing it, making money going short. I promise you, yes, it's much more stressful, but when you're making money going short and everybody's on Twitter like, why is it crashing? What's happening? And you have an understanding of why things crash and you're making money off it, it's like the best fucking feeling in the world. You become part of a next level elite club and you're like, oh, this is why people short. I feel fucking great. All these people are idiots who bought up here. I shorted and I'm making money. But again, it's the fuck zone because once you're short, you're nervous. If you're shorting a parabolic move at 10, fuck, is this the top? Oh shit, it's at 20, right? If you short a parabolic move on the first supply zone, but there's another two that are pretty high up above that level, and you get short, you're like, fuck, I'm short. It's probably top. But what if it isn't? And what if this thing keeps dragging you up and keeps fucking with your head and keeps stopping you out? And mind you, this is not just going to be a clean run up and then run down. At these supply zones here where you're trying to get short, price action is going to be all over the place, swinging you all over the place and fucking with your head. All right, so that's why I call it the fuck zone, because you're like, shit, this is scary, this is crazy. It can be very stressful, but also extremely rewarding when you actually make the money and call the short right. So why not short again? And just like I was saying before, it's a true test of your patience and discipline. It's extremely high stress and extremely high risk. Okay, so you need to be very, very careful when it comes to trading short and having a high understanding that there are these situations where it might not be the top. Okay, so when you're guessing the top, which is why it's so important that you have trading plans and have stop losses in place, because you might think the top's at 5. Guess what? The top isn't until $40. When it's at $5, it's already up 500%. And it seems ludicrous to think that it would ever go to $40. But it can, and it will. And if you don't manage your risk, you're going to get blown up just like this guy on an E-Trade, and all of a sudden Otis broker a bunch of money. Again, crypto doesn't really operate that because it's open 24/7, but you could potentially lose your entire initial position when that happens. But anyways, guys, that's why you potentially don't want to short. But it's important that we understand both sides of the trade, and you'll also see once we get into live trades how rewarding it is, yet stressful to make money when things go down.